Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Spandana spoorthy, which is at reasonable valuations. But let's discuss about how the business has done over the last 1 year. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Spandana Sporty, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get that $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also you can pay upfront for 10 months, you get 1 year access, so that's a 16% discount. For detailed market or company talk or number of stocks you're holding, you can directly email me and we can work things out with a fee, with a discussion. And also if you cannot pay on Patreon, you can join the YouTube membership as well. Now, about the company, established in 1998, it is the leading microfinance firm of India, and it has different products of all needs for all people, and it lends to lower income group people in small towns and villages. Their products include loans against property, personal, gold, and interim loans. It is spread across 17 states and nearly 1,000 branches across India, and leading banks and NBFCs are lending to it. Now about the financials of the company. So these are December quarter numbers. The sales were flat around. You can say it's not that sales went up. So sales were flat actually, not 20% up, but sales were flat at 328 crores. Profit was of 40 crores versus a loss of 30 crores. So that's why NA there, because from losses, the company came back into profitability. There's high institutional holding and only 1.4% free float is there in the company. So mainly institutions and promoters are invested into it. 1.5% is with the retail holders or retail players. Return on equity is around 22%. Operating profit margin of 56% is pretty strong. Very high promoter holding, very good promoter holding, and margins are pretty strong for the company. In terms of performance, it did exceptionally well initially when it was listed, went up 64% in the first 3 months of listing, but it has corrected very reasonably from those levels. In fact, it is at virtually 52-week lows at the moment and trading at 18, 17, 18 times earnings. So it is not very expensive at the moment, but there are reasons for it being slammed down to such levels. We'll discuss about that now. So there are a number of issues with such companies. This is a microfinance sector which is struggling, and is struggling because rural income has not improved over the last couple of years or so. Because of the pandemic, rural income and lower income group, you can say, has been hit big time. The lower middle class and lower class has been hit pretty badly over the last couple of years. So the microfinance business hasn't picked up that much. Rural economy has been under stress, and loans to lower income group is risky. So this is another reason why it doesn't command a very high PE, because you never know how NPAs could just crop up and could escalate within a matter of 1 or 2 quarters, and people will not, or high net worth individuals will not be able to get a favorable exit, so they don't like to probably invest big time into such companies. Banking and financial firms are under the scanner at the moment. We've seen what has happened with Yes Bank. We've seen what has been happening with PNB. PNB, there was a case earlier, and there are other companies as well. So it's always under threat of vigilance and some kind of, you can say, assessment being done here and there. And past experiences also do not build trust. As I explained, many microfinance companies have gone under during recession, and currently we are going through a very difficult phase in the economy. If you look at the middle and lower income group people, because of the higher inflation, it's extremely difficult to fathom that these kind of businesses could perform. Numbers are good only on face. What I think is that when you look at the future, I think NPAs could increase. I think there could be issues lending to people. There could be issues taking money from people who they have lended to, and many other factors would be there. Basically, economy needs to perform extremely well for microfinance companies to do well. If you look at the technicals, it technically it is looking weak. Major final support is around 330 levels. Short-term support is around 380 levels. It has gone up around 30% from the lows, but I think it could be range bound. Major upside is only expected above 460 or so. So currently, I believe that if somebody is holding on to the stock, then probably keep a, if you have a very short term view, then keep a stop loss at 380. If you have a slightly longer term view, then 330 is your final stop loss. So, in my opinion, it is an avoid at this point of time, and investors have become extremely cautious. And we are looking at things that investors are looking at businesses which are at a reasonable valuations, but where growth is very much possible. You look at defense stocks doing extremely well, which were trading at single PE. You look at some select infrastructure stocks that continue to do well. You look at pharma and IT that are doing well. So very difficult to see riskier sectors do extremely well. So levels are attractive, valuations are attractive, but issues are there as I have explained. So this was a video on Spandana Spooty. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.